For me, being a trader, when I've blown up earlier accounts in my life, it was always due to the fact that I couldn't manage my trade and manage the emotions that came into managing that trade. So quite often I'd go and look at the trade, further down when I'd go to journal and I'd say, well, why would I take an entry there? Or why would I exit there? Like it just didn't make any sense in hindsight. But when you actually go back into the real-time application of trading and you see that, hey, maybe I was a little bit oversized or that was my third loss of the day. So I was just getting a little bit more spiteful or vengeful in the way that I was executing my trades. There's always some sort of an underlying tone of emotions that would impact my trading executions, and those would eventually, make me negate my trading plan, which at the end of the day, if you don't follow your trading plan as a trader, you're going to lose. We have to become as robotic as possible, which I'm sure you guys have heard that even in your own trading professions. And that's why trading algorithms obviously perform the best. They're proprietary services because you can obviously have emotions and human error outside of the equation. But unfortunately, us as retail traders that are just going in, hammering the keys on our own behalf, we have to be going in and making a strict process of managing these emotions. Yeah, Jesse. And fortunately, the biggest part that plays effect into it too is that they're not always the greatest traits to be reflecting on because for one, we all know, and we never like to, have our ego beat us in the way where we feel in our gut that we should be doing something, we go and do it. And then in hindsight, we look at it and say, why did we just listen to our mind blankly there without even running through, what our general trading processes may be for taking a trade or managing that particular one. So biggest kind of key point with this slide here, when I want to be talking about is, the best traders in the game, they're managing their emotions on a consistent basis. They still will have anxiety come up. They still will have euphoria maybe come up if they're really, really solid trader. They've been going on a great run down their stretch and having a high win rate, but they always know how to center or ground themselves. And that's one area where I think a lot of new traders, if a lot of you guys have put number two, or maybe you just have already experienced this in the past with having emotions play a pivotal, role in your trading, I would just strongly recommend you that you focus at least not for the next week, but even just the next coming year, because it's not something that's going to change over the next 24 hours. It's basically changing your trading psychology, over the course of your going and plotting and trading this stuff in real time. So it's not something you can just fix within 24 hours, or you just saying, okay, this is what I'm going to do. The biggest thing is you want to start tracking it, which today I'll be showing you guys within TraderSync. A couple of key kind of reports and metrics you should be looking at in terms of managing your emotions, and then understanding, okay, these are the types of mistakes that I'm making with my own trading. How do I know that I'm actually taking steps forward to know that I'm at least removing them from potentially having an impact on any future trades there? So new traders, so obviously the biggest thing that I think you guys may not already know is being oblivious to a lot of them. So like I'll go over, there's tons of emotions you can think of having when you're trading. The next slide, I'll be talking about kind of the main ones that I've seen just in my own accounts, and as well as with working with other traders. But the biggest thing is that new traders just do not know how to control it. So these emotions will arise. Let's say it's revenge. Let's say it's FOMO. Let's say it's you getting a little bit too ahead of yourself and being euphoric and getting a little bit too aggressive. The biggest thing is that new traders versus experienced traders, the newer guys will either be oblivious to it or they'll see that emotion come up and they'll lean into that emotion and they control the entire trading thought process from that point forward. But the more experienced guys, they're able to go and say, okay, I have spitefulness right now. I have euphorism right now. I just may be a little bit too overconfident or having FOMO, but what can I do now to recenter myself, reground myself so that that doesn't impact my trading plan? So that's going to be a big thing for today. I'm going to be talking about, these types of emotions to start out with, how to actually recognize them when they're happening, and as well as when you're reflecting on them in your journal. And then I'm going to be talking about just obviously ways that we can minimize these, because the whole point of this and using TraderSync and any type of journal out there, right, is to go and say, okay, these are the types of mistakes, these are the type of emotions that I'm falling most commonly to, and to actually go back and say, okay, well, if I have these 3 or 4 different types of problems in my trading plan, how can I actually make a trading rule to combat that and improve upon that in the future? So the whole point of this, I want you guys to be able to go and find out by the end of this workshop what these emotions are. If you haven't already, sign up for our free trial on TraderSync as well. If you don't have an account, I think some of you guys have put number 2s. You can either do it now or wait till afterwards. This webinar will be recorded, so you can walk through this on a later date. But be sure to take advantage of that 7-day free trial. really helps you guys walk through and getting understanding of how to utilize the journal, because it can be a little bit overwhelming since we have tons of features and reports you can utilize. But regardless, it's a great tool. You guys have access to it for a full week. And then on top of that, I'll be talking about this at the end of the workshop, but we have a Black Friday promotion as well, up to 65% off on the annual Elite plan. So be sure to take advantage of that if you're looking at getting your journal situation set up with TraderSync here for the end of the year. So what are trading emotions? So I kind of mentioned briefly on a couple of these, but the big ones, FOMO, it's most commonly talked about in the trading world. So basically it's just the idea of having fear. This was one of the big issues that I fell short of in my trading career, was being in chat rooms, following guys on Twitter, having alerts set on my own trading software, being subscribed to a bunch of Benzinga Pro and Trade Ideas alerts. So at the end of the day, I would just get a little bit too FOMO because of the amount of pre-work that I did either in the pre-market or the night before, spending 3-4 hours getting ready for the actual market to open. And then as soon as you see those tickers flying and you see people starting to make great trades and you're not in those trades, it can quite easily cause you to have FOMO, which eventually just makes you take a trade that basically negates any type of entry setup or requirement needed for it, and causes you to throw your risk to reward ratios completely off. So even if I would be really good with trading, 9 out of 10 days within 2 weeks, all it would take is me having one really bad FOMO trade on that next Friday, where I get a little bit oversized just because maybe I didn't hit my P&L goals for that week. And then it would catch me on the flip side. I'd maybe lose $500, $1,000 in that trade. It would wipe out 1 to 2 weeks worth of profits just like that. So fear and FOMO kind of go hand in hand. Anger was something that would kind of play off on a factor of that as well. Not so much on missing out of trades, but just mishandling trades that were either good setups, or trades that were bad setups that same thing, just you're questioning why you were even taking these trades in the first place. So I get a lot of regret on past trades, wanting to make it back, which is never a good process to have when you're looking at your trading plan. I mean, if you guys look at any type of trading system that you're trading right now, you're going to have particular entry requirements based on probably price, different things with volume, different indicators playing a role in it, the actual technical analysis setup that's being presented on that chart. But none of those things ever say, hey, if you lost $500 in your last trade, go double X on your sizing, right? But a lot of traders fall short of that because they look at their account, they say, okay, look, I'm trading a $4,000 account or a $5,000 account. If I lose $500 on a trade, it's going to really, really take a dagger to that account. I'm probably going to lose sleep over it, probably going to think about it the entire day. And all I'm going to be focusing on is how do I make that money back? Whereas the correct trader, the more experienced trader is looking at and sitting down and saying, okay, where's my next A+ setup sitting at? And how can I get the best entry into that trade? Because I know if I do those two things, I will make my money back. I will be hitting those base hits. My trading ratios will be in line, and my reporting will be efficient and showing success in that I'm following my plan. So the big aspect of all this is changing your actual mindset within handling emotions, and then your framework as to handling the P&L side of trading. Because a lot of new guys, I'm sure any of you guys that are in here that put it to, you're probably in trading to make money. I mean, nobody's in here just to be looking at charts all day. I actually, to goodness, wasn't like that when I first got into trading. But over time, what I did start to realize is you have to start to fall in love with the process of actually mastering the art of finding that perfect entry or finding that perfect exit, and becoming really robotic at that. The more that you see gratitude or success in finding that, the numbers itself will play, easily into the factor of that equation, and showing you that, following your process does in turn make you money. Whenever I was saying, okay, today my goal is to make $300 or $400 a day, and it would come to 9:59 a.m., which is typically around the time your mountain time. So I'd be about 11 a.m. Eastern, where I'd be stopping trading. If I didn't hit that goal and I'd already spent 6-7 hours doing this pre-market research and getting ready to take that trade, a lot of the times I would actually go in there and force a trade just to hit that target daily P&L. So same thing going back into these emotions, and patience was a huge factor in mine. Either trying to force trades or micromanaging trades I was in. It didn't take until I started using the exit report and the hold time report analysis with TraderSync for me to actually realize that, hey, like when I'm in a winning trade, I should actually be holding it for 45 minutes or longer with at least half of my position size, because I actually make more on those lotto shares than taking my quick 2-to-1 exit on within the first 5 to 10 minutes, right? So there's a point in time in my own career where I'd go into a trade, especially near the open, I'd be in it, out of it in 5 to 10 minutes. And I'd never keep any trailing stop loss, even if I had a great entry, or even if I had the ability to ride that trend on the upside or to the downside if I shorted it. So a lot of the times, what I realized was, just trading the actual P&L itself would play an impact into my overall statistics and my reporting. And especially, like I said, going into that whole time report and then realizing that even though I was keeping less than 0.5% or 50% of my share size for those 45 minutes on average, that realized P&L, once I would close out the trade, would actually be higher than me taking that quick 2-to-1 off the hop. So that was a pretty good pivotal moment in my own trading where, utilizing reports like that and dissecting these types of emotions helped me build trading rules to come and say, okay, how do I manage fear or FOMO? How do I manage, desperation or impatience? How do I work on euphoria? Sometimes I didn't quite have to, end up having this in my own career. I know of a lot of traders that have had this, especially if you guys are trading options at all. A really, really bullish or bearish market where the trend is pretty repeatable and predictable on a daily basis. I've seen guys that, take a $200, $500 options account and turn it into 50 grand within a month, and they've lost it within not even a week after that, just because of a market reversal. And these guys get so ahead of themselves and thinking like, okay, options are one of the easiest things to make money at or to get rich at, right? There's tons of social media marketing out there on options trading. And there's tons of guys that, promise the world on what you can reach and achieve in it. The realistic aspect of it is I have never met a millionaire trader that does that type of trading, that goes all in every single day and are trying to get these 10-to-1 or 100-to-1 trades. It's far and few between. And as soon as those options expire, your trade's left worthless. And if you're going all in, you're basically robbing yourself of your account within every trade that you're taking. So the biggest thing in talking about these is just actually being aware of them. So any of you guys on this, is there any other emotions that you may have, I maybe missed on, or things that you've had in your past? I think greed and euphoria kind of play hand in hand. Greed is obviously a big factor, especially if you get ahead of yourself. It's really tough for you to say, okay, let's just stick with taking these base hits, right? If you start to have 3, 4, 5 days in a row of great trading, your journal looks really good. It's pretty easy for you to sit there and say, okay, well, maybe I'll just double click on the position side of things and I'll be good to go. It's crazy how much that oversizing your positions plays a role into you managing that trade, because especially if you guys have been so accustomed to maybe taking 50 lots, 100 lots, 500 lot share sizes within any particular trade, if you start to double those numbers, your brain just kind of starts to play tricks with you. And I've noticed this more times than not with traders, that it's not the greatest way to go about scaling or getting ahead of your account. The biggest thing, and even this is what I even took to my own account size, was focus on hitting a certain ratio of green days for the whole month, a certain P&L level for the whole month. And if I did that, I would only ever increase my position sizing by 1.25 to 1.5 times. So 25% to 50% of what I was trading this month, I would increase it, to that following month. At least that point, I didn't feel like I was getting too far ahead of myself. That's what my trading mentor was always teaching me and instilling in my mind, because I would have a couple hot days, start double my position sizing, and it'd fall right back at me. And I'd take twice as big of losses, take twice as small of winners, because I couldn't get past the fact of managing those trades. And it just became a cumbersome mess after it all. So why should we care? I've been talking about a little about these already, but just want to instill on these on your guys' end here before we jump into the actual software side of things. So no trading emotions to play an impact on your trading plan. If you can look through any of you guys' trading systems right now, it probably does not say, hey, if you have fear, take the trade here. If you have FOMO, do this. What they should say is, if you do have FOMO or if you do have fear, you should not be doing this or taking this trade in any shape or manner, right? So those would be called your trading rules. For me, for instance, I had 10 trading rules that I had sticky taped on a notepad on my first trading system. And I had that up there for 3 years, just so I could instill it every single day, every single trade I took. It would be right in front of my face. I had to make sure none of those things met those criterias. And if they did, then I wouldn't be able to take that trade. So it's kind of my checklist, sort of say, that would help me prevent myself from having any of these emotions play an impact on that trade. They're also usually a sign of a pre-existing symptom of the plan you're trying to avoid. So let's say like it's something to do with FOMO, right? Usually if you have FOMO coming up, it's because you're looking at this trade and you're noticing that it's $2 off the current risk or the current support level. And because of that, you start to say, okay, wow, this thing's already shot $2 off the 9 EMA. It could maybe go $5 or $10 off this. And this has already happened in the first 30 seconds. So this could be like that stock like Sava last year where it went from $5 to $65 in a matter of an hour, and I could get rich off that, right? All of that could be avoided. And just by saying, okay, well, I have FOMO right now. Why do I have that? Well, it's moved $2 off of that EMA. Well, if it's moved $2 off the EMA, I shouldn't be looking at taking a trade now, but rather be looking at it for a pullback setup maybe later on in the day, or even just avoiding it and making a note of this for maybe a day 2 play tomorrow, right? So one aspect of this is whenever I at least even, and you guys can attest this too. I mean, Jesse put this in the chat box there saying some of his biggest losses come hand in hand with having emotions. That's the same thing even on the flip side with having some of my biggest trading wins. I can account to having my cleanest executions on having the best entry, where I can get really aggressive on my position sizing because I have a tight stop or a tight risk to reward level. I can get a little bit more aggressive and I have way less stress because I'm still risking the same amount for a much higher reward. And those trades, I end up having zero to, or, little to no emotional impact on them, just because of the fact that you're removing all of those pre-existing type of symptoms or emotions to come into your trade before you even enter it. So focusing on getting that really, really crystal clear and good entry, that alone can help remove 70 to 80% of the emotions you may have when managing that trade. So that was one thing I really tried to focus on, was controlling your controllables within your emotions and saying, okay, if I do have stuff pop up, what can I do to prevent myself from feeling that in the future? And if that's, in following my trading system, then that's great. I just have to do a better job at following my trading system. But the biggest thing too is talking about why we want to be tracking them. And that's the whole purpose and value of utilizing TraderSync here today, is going in and saying, and I didn't have this 10 years ago when I started trading, unfortunately, but since joining with TraderSync, it's been hands over knees, eye-opening for what you can actually see, not only from you just saying from a hindsight basis, but actually quantifying it and looking at reports and saying, hey, when I have FOMO, I'm actually trading at a 10% win rate with less than 1-to-1 risk to reward ratio. My average winner on a FOMO trade is $30. My average loser is $200. That kind of stuff makes it pretty wide opening for you guys to understand, okay, this is what I have to really be working on in my trading account, not going and trying to find Tim Bob's picks on Twitter for his next short option play that we're trying to get rich off of. I mean, you can do that as long as you want, but you can do that at casino and probably have the same type of win rate there. And that's what we're trying to avoid. So thankfully, like I mentioned, TraderSync, we can track all this stuff. We have the mistake functionality and feature within our platform there. I utilize it for a couple different purposes, but the ones that I've highlighted here in yellow are going back to these emotions that we were talking about in a few slides. But things like chasing, having FOMO, micromanaging a trade maybe due to fear, being oversized, selling too early, being too aggressive. These are all things that we can track. And then over the course of you logging 50, 100, 500 trades, you can go back and say, okay, this is what I'm making the most frequently in terms of mistakes. Now, how can I combat that? So let's take a quick example here. We'll be looking at just an account. Let's be a small trading account that would be maybe realistic to what you guys currently have, right? So we'll talk about this one trader. Currently, he's got a $5,000 account, okay? His average trading win goal or P&L per win trade is $120. His daily P&L goal will be 200. Average trade loss goal will be $60, so roughly 1% of the account. And the average risk to reward goal will be 2-to-1. This trader is striving to have a 65% win rate, and if he does so, then he knows that this account will be growing month over month. This is kind of a generic small account type of scenario. You're looking for a guy that's maybe trying to risk 30 to $60 per trade, making $100 plus on the winning side, and then a daily goal of $200 a day. $200 a day is $50,000 on the year, which is phenomenal for anyone that's looking to get into trading. And it's a pretty realistic goal. It's a little bit more on the aggressive side, but it's not you sitting there and saying, okay, I'm looking to make $1 million this year. I'm just looking at generating 50 to 100% growth on this account month over month. And I've seen this before with traders, especially really, really well experienced traders. They may only keep their account at 50 grand or 100 grand, and they just wire out their profits anything above that, because you don't necessarily want to have as big of a portfolio as you may think within your broker, it makes a lot of sense to keep at a level that you're, well versed at trading. At that level might be 25 grand, might be 50 grand, might be 200 grand. But there comes a point in time where you just want to maintain that level. And if you're above it at the end of the month, you withdraw those funds. So setting a goal of 25%, 50% month over month growth. It is attainable. I've seen traders do that at 5 and 6 figure levels, but it is something where they're treating it like any other profession, and they're not just hopping in some guy's chat room trading for 6 months and thinking that it's achievable by not putting in the work. So reviewing this trader A's mistake plan, this trader's got about 100 trades logged on the mistakes end. So this is great. We have enough data to come in here and say, okay, what type of mistakes are actually playing an impact on this trader's account, and if there are emotions, what can we do to combat those in the future? So looking at this and going back to this trader's account, their goal is 65% win rate, right? Average loss 60, average win of 120. So looking back at this, we could see that when this trader did have any of these types of emotions that we've been talking about in the past, their win rate dropped completely off the board. So this win rate went from 13% on one setup, or mistake rather, to 7% and 9%. To even this one time where they were oversizing really bad on 2 trades, they didn't win on either of those. So just right off the hop, by looking at tracking these actual emotions, we can come back and say, okay, wow, when I'm actually chasing trades or having FOMO, this is how big of an impact it's having on my account. Now, going back, I'd say, okay, if FOMO and chasing, these are the 2 most frequently made mistakes. Now, what can I do to combat that? If it's chasing and we took 72 out of 100 trades chasing, we need to have a better entry rule for actually taking those trades. And I would probably lean to say that, the FOMO and the chasing aspect of it, they're probably hand in hand. You have FOMO, so you chase the trade. So I'd probably combine both of these even to one aspect. But this is great because this means that, okay, 80% of these losses are coming from one particular problem. And that's a problem that majority of the time we can actually prevent by setting up a structured and a strict entry criteria for taking a trade, right? So kind of reflecting on this guy's account in this report, like I mentioned, his earn rate's been taking a hit amongst all of these types of emotions or mistakes playing an impact on his account. And the biggest thing is looking at, okay, from a growth perspective, you can't be having any of this play more than, I probably even say, a 5% impact on any given trade for you to actually have solid success and growth. For instance, like when I was early starting in my trading and I would blow up my first free accounts, I would say that it was probably 60 to 80% of my trades would have some sort of a mistake or emotion tied to it that was like this. Now I'd probably say I'm below 15%, maybe 10%, which is great. But like I said, I've still seen traders that have, I'd say on average, out of 100 trades, they maybe only goof up 5 of them because of having emotions. And that's the type of area or aspect you want to be getting to as a trader. I mean, that if you essentially look at it, you're getting to trading as robotically as possible with still having human error, but you're not making it 70, 80% of the time when you're actually taking a trade. So looking back at this trader's kind of reflection in the report, we can obviously tell that, okay, when this trader is taking A+ setups, following their trading rules, and is not allowing emotions to come into effect, their win rate is 6 to 10 times higher than what their win rate is here, right? This trader's looking at about a 65% win rate. And once they're focusing on their setups and they're not having chasing aspects or FOMO aspects or oversizing aspects play a role into that actual trade there. Whenever trading emotions do impact the trade, the trader's average return never reaches their target trade P&L goal. So whenever this trader's having FOMO, whenever this trader's chasing, whenever this trader's getting too revengeful, that next trade they take will never eventually reach that target trade P&L, which was that $120 mark that we were looking at here, right? So we can see here when this trader has chasing or FOMO, their average return is much less and sometimes even double what their target loss was. You can see that the oversizing aspect there. This trader is actually trying to only lose $60 per trade. He took 2 trades that actually ended up resulting into an average return of minus 116, which is what this guy's average trade return goal is. So you can see how as soon as these types of things get involved in your account, how messy it gets and how bad your reporting looks. And I'll show you in a couple slides what focusing on your trading plan will actually showcase and look like. The numbers will look a lot sweet and sexier than what you're looking at here, but I'm trying to really visualize this for you guys. That's saying that, hey, these mistakes that we make cost us detrimental amounts to our account, and they can be avoided if we just clean up our trading, clean up our thought process, and be a lot more serious and professional when we're reflecting on we're trading there, not just taking it as a hindsight 50-50 and just saying, okay, I'll work on that tomorrow. So when a series of losses appear, we could also know that this trader will tend to develop FOMO and start chasing trades. So this is kind of an inference just from going through more of these trades on an in-depth detail. But most of these chase and FOMO trades would not be at the open. So we would take maybe an overextended trade or too aggressive trade near the open. And then basically we'd have FOMO and chasing from every trade on board from that point forward. So it's kind of a cool trend to see that, whenever this trader does lose, FOMO and chasing starts to come into place. So how do we combat that? Maybe we need to make better loss rules, which is saying that, if you lose $50 on any given trade, you're max to lose 3 trades in a row before you have to walk away, right? Whereas this guy, once he took a $60 loss, he was basically going into chasing FOMO and would take a series of 4 to 5 more trades of that, which would completely negate his total max daily loss goal for the day, which quickly causes account blowups. I'm sure you guys have seen that too. So in doing all this, there you can tell like their RR is completely thrown off. Average return to average profit. Average turns, what your actual per average return is for taking any trade with having chasing or FOMO. So you can see here that they're never ever achieving that 2-to-1 risk to reward or win rate. That's playing into the fact of what their goal was here. So next, okay, let's say you guys are doing this tonight and you're looking at, marking down your trades, or you already have been doing this and you're going to just go through maybe your last 50, 100 trades and mark down when you've had emotions, right? The next thing you're going to want to do is look at the trades that didn't have this affecting to them. So you might be trading 2 to 3, maybe 4 different types of setups or styles. So the next thing what I want you to go through and do is say, okay, when I'm having FOMO or when I'm having fear or greed, or when I'm getting too impatient, when are those types of emotions showing an occurrence with these particular setups? And this is really eye-opening for me because I used to trade every single thing that was available to a man in terms of a setup and strategy to trade. And it wasn't until I did this and say, okay, these are the mistakes I made. These are my setups that I trade. Now, which setups am I trading that involve these types of emotions the most? Because those are obviously setups that I can't emotionally or psychologically manage at a consistent basis. So when doing that, it came to the point of me trying to find setups that weren't opening market setups, which I thought I would be primarily better at, but actually secondary setups, which maybe happen 30 minutes or an hour into the market when things just start to settle off. I noticed my win rate was much more higher. I'd have way less trading mistakes, and my trading would just be a lot more cleaner and profitable from that point. So this is where you guys want to go back into your TraderSync account. You're going to want to run your setups report and start to figure out, okay, which setups am I trading the cleanest from actually going through all my mistakes and all my emotions there. Next, what we have to do is develop strict entry rules to ensure that our risk to reward levels are followed. So if we're looking at and saying when we're having FOMO or chasing, our win rate drops down to 5 or 10%. Okay, well, then I need to make strict entry requirements that ensure that, for one, those emotions don't come into a play. And then secondly, if they do come into play, how can I prevent them from actually impacting that trading decision for me managing that trade? Biggest kind of thing that I even take out of this for knowledge was, and I still struggle with this, but sometimes the best trade is no trade, especially when you get into slow parts or low parts of the market in between earnings season, or where there's just no kind of general catalyst going on in the market. Sometimes it's better to shave off 50, 75% of your trading activity for that month, just because of the fact that, either commissions or you forcing trades that aren't A+ type of setups, just slowly play a bleeding effect to your account. And if you're at that small account stage, it's way more important for you to be a sniper than a guy that's running a machine gun trying to hit every single trade that's out there in the market. There's always opportunities that are presenting themselves every single day. So just note that preserving your capital is always better than you forcing a trade or taking a trade that maybe doesn't fit all the criteria that you so hoped it to have passed prior to taking it. So we're going to look at an example of this using the journal. So this was going back to this previous trader's account. When they were chasing, a lot of the times when they would take a chase trade, it was still with a valid setup that would just basically completely negate the setup, completely negate their entry, completely negate their ability to get out of this trade, just simply because they had this emotion that overruled all trading decisions on this particular trade. So This one, it's an opening range breakout. You can see here, this is the pre-market trading volume. It looks like this ticker gapped up, potentially probably on earnings. This opening range setup basically states that there's a range formed within the open. There's also volume to support the move. And as soon as we have a bust above this range, we typically have an early morning run with a couple pullbacks to trade if they present themselves, but kind of really easy go-to type of setup that works really well in earnings season, but is also really high stress because of the fact that the first 15 minutes to 30 minutes to open, it's very, very, very high stakes, high volatility. The majority of the volatility of the whole day happens within the first 30 minutes. So there's a lot of times where you guys will see shakeouts or stocks that move 2 to 3 times what their average range is on any given 5-minute candle, within those first few minutes to open. So it's not for the faint of heart. And especially with this type of reflection on this trade, we could see that, okay, this trader that had a chasing aspect, they saw that this trade moved from $49 down to, up to rather $52, which is roughly $3, or what would that be? About 5% of move within one candle. So if you're a day trader, you're sitting here, this is an earnings breakout, it's gapped up, it's moved 5% in 5 minutes. You might be sitting here and thinking, okay, wow, shoot, this might be the one that goes today, and really makes that run for it, right? So this trader here developed a bit of FOMO, and seeing this early morning range kind of develop, bust above pre-market highs, chases that pre-market high entry, completely forgets the fact that, oh, wow, the support level is actually $1.50 below this level where you should be looking at. And then the trader basically gets way too oversized and has to get cut out, even while the setup looks like it's valid, right? We have an opening range develop, holds these EMAs, finds tight, range gets consolidated, busts above. We have a couple flag breakouts or pullbacks into this 9 exponential moving average. So there's a couple different ways that any type of technical trader could have taken a good trade out of this. But having emotions come into play, having them impact your entry right off the hop, completely throws everything else out for this setup, and causes you to take a loss, right? Even though you maybe have done 85 to 90% of the pre-work and saying that this is a great setup to take, you let emotions come into play, and they completely throw everything off statistically for you to have a good trade on this trade. So, to kind of inference on this trader basically took a $160 loss, which was 2.5 times greater than their target stop loss of $60 there. So, one trading rule that this guy could have created was making sure that, okay, if I'm going to take an entry on this, it has to be on that first green candle to hold the 9 EMA. And I have to also take it near the 9 EMA. If I'm going to be taking 3 entry executions on this trade, $1.50 away from the 9 EMA, then I need to ensure that my risk to reward or my position sizing is probably 25 to 30% what I'd actually be taking if I got that closer on support. So obviously this trader got, instead of less of a position size, they took more position sizing because they got a little bit FOMO on that chase. And then their stop loss basically comes down to a matter of 50 cents to 25 cents on a stock that's moving $3 to $4 per minute. And it just obviously causes you to get stopped out just like that. So quick reflection on this: stricter entry rules, ensuring that if it's an ORB, you're buying it on the support levels and you're not buying it at the top of the candle that closes. That's one of the biggest reasons to lose easily in an ORB setup, is by buying the highs and shorting the lows. Going back on this, you want to be looking at the range, getting it on support on the lows if you're buying it, or on support of the highs if you're looking at shorting those downrange breakdowns. So, comparing this now into saying, okay, when I actually am trading this opening range breakout, clear and following my trading plan, we can actually see here just how much better this trader is performing. So getting back to what the stats are showing, when they were trading cleanly and not having trading emotions play an impact, they were winning 63% of the time. Okay. Their return loss was $800. Their return to the positive side was $6,300. Their average return per trade was $111. Their average profit was $200, and their average loser was $40. So each one of these ratios that we're looking at here, going all the way back to this trader's kind of goal, were in the green zone, right? They were winning on average more than what they were looking at for their average trade. Their daily P&L goal was obviously being hit. Their average trade loss was actually less than their average trading loss goal, is 40%, which is roughly 33% less than what their target goal was. Their average risk to reward was greater than a 2-to-1. and the win rate was just below 65 at 63% there. So you can come here and start to see, okay, that just how important trading emotions are in a successful versus an unsuccessful trader's account. I mean, it doesn't get any more visual than this. I know that all of us have different types of strategies and systems that we trade, but the biggest thing that you guys have to understand is saying, okay, this is my own personal type of system or strategy. These are where my fallacies lie, and this is how I can start to make a process to eliminate those stuff in the future and become a much cleaner trader there. So where do we start tracking all this, right? So the biggest thing I want to give you guys is a quick process on how you can do this, because you might look at this and say, well, I don't know, maybe it was FOMO, maybe it was revenge trading, maybe it was fear. I'm not too sure on that, right? So I'll give you a quick step-by-step process. If you were going out and journaling tonight, this is what I would do. So reflect on the entry. The entry is the easiest way to understand where the emotion came into play. Don't look at the P&L. Don't look at whether it was a winner or a loss. Always look at where you took that entry, because the entry is going to be a factor on whether you followed your trading plan or whether a trading emotion was the full culprit of you taking that entry. So if you look at that and you did have a chase or you had a poor entry, either on a timeline basis or a P&L basis, I would next look and say, okay, well, what type of emotion could have played an effect there? And if you have one or two come up, or like I'm saying, more than one come up, that's fine. The biggest thing is make sure you keep them organized. So, you can put FOMO and fear probably as the same thing, maybe just list FOMO as fear. But what I'm trying to say is never have duplicates, because if you're just starting out, you want to make sure you get as much data as possible. So by keeping things organized and getting larger data pools compared to saying this is fear 1, fear 2, fear 3, or FOMO and fear, they say the same thing, just condense it. You'll get way more data points quicker, and you can start to get inferences a lot more faster there then too. But once you do find out why that issue was, or if you did have emotion, plot that as your trading mistake. Next, you're going to want to go and set a goal for you. I would just simply do your first 50 tradings that you log. Try to get your first 50 trading mistakes logged as well. So yeah, it might take you maybe 100 trades or 200 trades to go and log with that, depending on how clean or good of a trader you are. If you're a guy like me, it might just be your first 50 trades that show your first 50 trading mistakes, but nonetheless, set that goal and make sure you hit it. We have that 7-day free trial available for to you guys. For instance, when I joined with TraderSync, I just got the subscription on a Friday. Saturday, Sunday, I did about 5 hours of journaling, went through my last 3 blow-up accounts. And by that point, I had enough inferences to say, okay, wow, I got all this data in here now. I want to take advantage of it and actually utilize a journal here from this point forward then. So make sure you do dedicate an hour or two just to really get the data into the journal and actually make those proper inferences. You're not going to be able to just plot all your trades in there and then it'll just say, okay, this, and this. I mean, your win rate only goes so far. Your expectancy only goes so far. But the biggest thing for you guys, that if you don't know why you're losing in the market, utilizing the software and the power of the software that TraderSync possesses to really do the heavy lifting for you, and just you going in there and starting to just only work on reporting, right? We don't want you to go in there and start doing Excel stuff and going in there and typing in numbers here and there, because that's what I did when I started journaling and I got burnt out right off the hop. The one thing we want you to get doing in and using TraderSync is actually going in and running through reports and getting inferences from those reports that can help you make better trading decisions tomorrow. It's the whole purpose of it. And that's where I actually fell in love with it, was because of the fact that you don't have to be so focused on getting inputs into the software. Aside from saying this was, your general mistakes or your general setup, that's all got to be manually done, which for me, for instance, takes me about 5 minutes on any given day to go in and journal, which I will do any day that I trade, just because of the fact that, 6-7 years previously, that would probably take me 2 to 3 hours to do, because we didn't have this technology that we have today at our fingertips there. Next, what you're going to want to do is start to track these emotional mistakes using that mistakes report, which I'll showcase here in a second, and start to see which ones are consolidating the most, right? Those are the ones you're going to want to focus on. If you have FOMO happen 1 out of 100 trades, or you're revenge trading 1 of 100 trades, you probably don't have to be focusing your whole next week worth of thought process on that, right? You want to be looking at, say, okay, when I make a mistake, what is the mistake the majority of the time? And if whatever that is, that you're making more than 50% of the time, if you are incurring a mistake, make a trading rule to combat that, because you'll immediately see improvement upon your consistency and your process of trading there. And then finally, like I said, make a trading rule and then record this, right? So if your report says, okay, you got to be focusing on um, euphoria or just staying grounded as a trader, not getting too high or too low. Okay, well, make sure you make a trading rule that says when I'm actually going to take a trade, I have to quickly just not even 1 second. I have to check with myself to ensure that I am level grounded. Okay. If I can tell that my heart rate's a little bit higher, if I tell that I'm a little bit more pissed off than usual, I want to make sure that I do just a quick half a second reflection before I take this trade, just to know that it's not my ego or it's not my emotions taking advantage of this trading decision here. Now, the next report I'm going to show you guys is the trade management tool. This is basically where you can actually see the line in the sand of how you're performing against your mistakes or your emotions and how you could be performing as a trader by cleaning that up. So we can see here by looking at this, based by running this report, you're going to want to input the mistakes that you want to be avoiding and then focusing on those A+ setups that you know you've been trading really, really well. What this report's going to show you is 2 line graphs. The one with the dots is basically your actual P&L line graph from the trades you've been taking, and the line or the line without the dots, sorry, will be your simulated line graph, which basically states if you don't have these types of mistakes or emotions playing into your past trades, this is where you could have been. So I like to call this as like your standard deviation of where your actual trading performance, your account could be. And it plays 2 pivotal diagnosis to any trader, that if you're winning or if you're losing. So you can see this trader right here off the start was in the red, right? So its first 50 or so trades, it actually didn't even barely make hardly a cent. And for half of that time was in the red. So if you were a new trader trading this system or your setup, you might have been sitting there and saying, okay, well, maybe this strategy doesn't work, right? Or maybe the system doesn't work. But the simulated line graph, which is just as important as the one you've taken, is showing you that no, this strategy, if you focus on the setup and you're not taking these stupid mistakes, it's actually a profitable system to be trading. So that one gives you hindsight to say, okay, this is confidence in the strategy. It does work. I just need to be a much better trader. On the same token, if you're a guy that's been really consistent, you know, this next trader for the next 100 or so probably trades went from $0 in their account to just over 12,000 bucks. Now you could have been maybe a little bit overconfident saying, you know what, I've made it in trading. I'm doing great. I don't need to improve anymore. But you could also go back and run this report and say, wow, you know, I could have made $21,000 had I still been improving upon my mistakes here, which is where we'll start to get into that whole idea or aspect of becoming as robotic as possible. You know, these lines will never intersect or connect or overlap. But the biggest thing is saying, okay, if I'm at a 50% deviation, how do I get this down to a 10% or a 20% deviation from where I could simulated be, had I just been sticking to my setups and not having mistakes. So it's a really, really crystal clear report for you guys to get a kind of a line in the sand. If you're a trader that's making money, if you're a trader that's losing money, how your trading system's actually performing and how much better or worse you're trading against that, just based on the mistakes that you're incurring. So if you guys have never journaled before, we have the software here. We have the iPhone or iOS and Android app. We also have the desktop version as well. Both are really, really efficient and easy to use. The main purpose of using it and using TraderSync is the simplicity aspect of it. It's really, really super simple to be able to go and import your trades if you don't already have an auto connection. It takes about 15 to 20 seconds to import your trades from your other software, your broker. It's flexible in nature that you can go and do reporting on the go. You can hop on your stats and get your reporting on your iPhone. And it's also powerful in the aspect that we can do cross-layer filtering, which for any of you guys that have ever done paper and pen or an Excel sheet, it gets really tough for you to go and say, okay, I want to run a report right now that focuses on trades in the first 30 minutes where I hold those trades for longer than 45 minutes with this type of setup, with this type of sector. We can do all of those types of things easily with the click of a button within a matter of seconds on TraderSync. And those are things that I could never, ever achieve when I was using a paper and pen or my own Excel sheet, custom-made journal that I thought was top of the line 10 years ago that obviously didn't get me the answers that I was looking for there. So, you know, with this, today's workshop, wanted to give you guys a process, whether you were still doing paper and pen or you're going to be doing an Excel sheet, that's fine. I still did that when I was grinding out my earlier years. I wish I didn't. And I wish I took advantage of a software that, you know, like TraderSync that existed at the time. But nonetheless, what we have going on for you guys this week is our Black Friday promotion, probably our best sale we've ever ran, especially on the elite plans. You're getting about 65% off on the annuals. I believe 58% on the premiums and then 50% off on the pros. So it's a great time to take advantage of it. We do have coupon codes for the premium and for the elites. But if you guys haven't already started using TraderSync, be sure to go in and at least start with the free trial. That's where I fell in love with it. That's where I went from being a trader and a user to saying, okay, I actually love this software and this program. How do I actually work for this company? Because I see how much value that this actually brings to me as a trader. So I hope that happens to each and every one of you guys. I will open this up to some questions in the chat box here. If you guys do have anything in terms of, even just flat out emotions, things that's happened in your own account, the promotion going on here, but we'll opening it up here for about 30 seconds to a minute. If you guys do have anything, and then afterwards we'll be getting a follow-up email as well as a recording to this workshop here today. And I appreciate all you guys coming out here. This is the first one we've done. We're probably going to be looking at doing these every other week, changing up the topics, having some guest speakers on here as well. So yeah, stay tuned to having more of these come up in the future for sure. Jesse, how'd you find that? It's good. Awesome. Appreciate it. Thanks for tuning in. Mike, Ozzy, Camet, John. Appreciate all your guys' attentiveness on that there. Everyone else that came in today, appreciate it again. You will be getting an email from us later on today, this evening, with the offer for our Black Friday, as well as the link to the recap or the recording of this workshop as well. So appreciate having you guys all on here today. Have a great rest of your week. Have a safe week trading. Make sure you're trading smart, following your trading rules, making sure you're spending that time, putting in the hours in the evenings to reflect on it and journal. But I wish you guys nonetheless a great Q4 of your trading, and we hope to see you guys in a couple weeks here on the next workshop. Appreciate it. Take care and have a good one.